Hello, everybody. Welcome to another life insurance episode. This is Chad McMahon with Protect with Insurance. This episode is on the difference between whole and term life insurance. Now, I'm going to give you the short and sweet definition of life insurance, whole life insurance, and then term life insurance. So first of all, life insurance is simply an insurance policy that insures your life or someone else's life. And if it's a policy for you, it's going to pay your loved ones. You get to choose who the beneficiary is. That's the person who receives the benefit of the policy upon your death. And we specialize in tax-free life insurance here at Protect with Insurance. So people that want to get a policy that your beneficiaries will not be taxed on what they receive, that's what we specialize in. And it's a wide array of different kinds of life insurance. There are many different categories, and we help you with that. But you won't have to worry about that taxation for your loved ones, which is very important, especially if you're looking at a $100,000 or $300,000 policy, let alone a $20,000 policy or even a $5,000 policy. Knowing that they're not going to be taxed on that is significant. It's hard enough without extra taxation. So that is just life insurance. Now, whole life insurance is going to be, and you're going to see me looking to the side here. I want to make sure I don't miss anything. This is important stuff. So whole life insurance is it's a full coverage, meaning it covers all deaths except for intentionally self-inflicted, but covers all deaths, and it's going to build a cash value over time. So you're paying into your policy, and it's going to build up value. A lot of people refer to it as kind of similar to a savings account. It's not quite true, but it's the same general idea, or builds up a value, and you can tap into it if you absolutely need it. Now, they generally pay $5,000 to about $40,000 to your loved ones, and it comes in the form of just a lump sum, one check, and then they receive that. Now, the price and the policy or the coverage amount are fixed for life, which is hugely important. You know that whatever you set up today, that price and that coverage amount, let's say it's a $20,000 policy and it's, I don't know, $100 a month, that is never going to increase. The coverage amount will never decrease. So you're set. It can be, as long as you set it up right, it can be the last policy you'll ever need. And in another 10 years, 20 years, whatever it may be, when prices on everything else are much higher and you will have more income then, your price will not be going up. So that is going to be fixed. It's going to be locked for you, which is a huge benefit. Now, these kind of policies, these whole life policies, they're ideal for financial gifts to your loved ones. They're ideal for burial and cremation policies because it's never going to run out. You don't have to worry about if you're getting it as a burial policy, you don't need to worry that if you outlive something that you're going to have to get reinsured. So they're ideal for that. Also for paying off miscellaneous bills. We help a lot of clients that they know they're probably going to have 10,000 bills or 20,000 in bills. So they get a whole life policy and they know that that's going to be squared away. Now, term life insurance, that's the other element of this. Term life insurance is going to be a full coverage life insurance policy for a length of time, so for a term. And so a term is usually going to be anywhere from 1 year, 5 years. More commonly, it's 10, 15, 20, 25, or 30 years. And if you're older, it's going to be a shorter term. Most companies will not let you do, let's say, a 30-year term or even a 20-year term. If you're in your 70s, you're probably going to be looking at a 10-year term, possibly a 15-year term. If you're in your 50s, you may have a little bit more options. You may be looking at 20, 25, 30 years. I'm sorry, you might be looking at 10, 15, 20, or 25 years. And if you're in your 40s or younger, then you've got the full gamut, and up to 30 years is typically the maximum length that you can get on a term life insurance policy. Now with term life, because it's a length of time for that policy, and by the way, with most of these terms, the term ends, the music stops, you get off the ride, and you've got to get reinsured. That's how most of these work. There are 3 common scenarios with term life insurance. One is going to be, most common is, the term ends and you have the option to pay a lot more money to stay on the ride. So if you want to keep that term life insurance and keep it going, the cost can increase by 5 or 10-fold what you were paying before. Usually it's closer to 10-fold. So let's say you had an $80 a month payment before. Without exaggeration, you might be looking at a $600, $800 a month payment now to continue past that term. It's not uncommon, especially if it was a 30-year term, because now it's based on your age and your health at that time. So very, very important to know that going into it. The other scenarios are that term may just simply expire. There may not be an option to continue. And then the third and less often, a less frequent option is going to be a term that at the end of the term, they send you a portion or even all of your money back. So again, say you paid in $80 a month for 30 years. At the end of the 30 years, they send every penny back to you. That's called a return of premium term. Those cost more to get when you set them up initially, and you've got to stick for the whole term, and then they send you everything back. And where they make their money on those is if you don't keep it for the entire 30 years, if it was a 30-year policy. Most of those return of premium options, the companies are eliminating their 20-year options, and they don't offer 10 and 15-year options. Now a lot of them are saying it's got to be 30 years. There are some exceptions to that. But with those, the longer the term, the less expensive it is. But those are great if you can afford them, if it's within budget. Now, prices are lower per $1,000 of coverage. So let's say you're looking at a $50,000 whole life policy and a $50,000 term policy. Which one is going to cost more? The whole life policy is going to cost more because it's never going to increase in cost. The insurance company is taking on more risk with the whole life policy in the sense that they're saying, okay, we're going to prove you. We're never going to increase your price. It's all going to be locked. Whereas with the term policy, they're saying, well, we've got a little bit less risk because this is only going to be a 20-year term, which is still a long time. But in 20 years, this insurance is going to run out. And we're betting that, Susie is going to be passing away in, maybe 30 years or 40 years or something like that. So it's a pretty safe bet for them to charge X dollars. And then they say that after that time, it's going to be done. Or else it's going to cost a lot more to keep going for a little bit longer. And there are limits to how long you can continue on those terms. So I hope this has been helpful. If there's anything else that you want to see in these videos, any other information, reach out to us. You can reach out to us at hello@protectwithinsurance.com or call us at 928-323-0933. We'll be happy to help you. All right, take care.